All right, let's talk a little crypto, because beyond all the trade headlines, one of the other big news stories coming out of the White House is a summit where a lot of the industry executives have been invited to speak with the president, who actually had a big unveil overnight, an executive order tied to this focus on creating a reserve of digital currency. Let's get some perspective on all things crypto now from Steve Kurz, who's global head of asset management at Galaxy. Great to have you with us. No shortage of headlines in the crypto world these days. But I guess I am curious to know, first off, how you're viewing where we are in the Trump presidency when it comes to the policies around crypto in general.
Well, thanks for having me. Yeah, it's certainly been a noisy sub 100 days. But on the crypto front, I think it's becoming increasingly clear. You had a little bit of confusion over the weekend when there was a tweet about a stockpile and a Bitcoin reserve. You saw an executive order came out overnight that really clarified what that is. And when you put that executive order into context, the SEC's working group that has eliminated SAB 121, the executive orders early on in crypto, the regulatory signalings from Congress, you're really getting a picture of a full 180 degree in DC that's not just driven by the Trump White House, but also by Congress and also by regulatory bodies. So I think for the first time in 8 years at Galaxy, we're looking forward to a lot more clarity and guardrails around how we can actually operate a digital assets business in the United States.
So, Steve, because it's very interesting, obviously, to see what the announcements are like and what kind of changes start to be implemented. But in terms of actual business process, can you give us some examples of what these changes ultimately enable, essentially?
Sure. Look, I think there's a couple of things. First and foremost, I mentioned SAB 121. The reason, without using jargon, what that really means is that it's the beginning of banks being allowed to touch crypto on behalf of their customers. That was a big hurdle to institutions feeling comfortable coming into the space, and that's been eliminated. So that's point one. Point two is when you think about an asset like Solana, which we're really excited about generally as a company, CME futures are now launching on Solana in a couple of weeks in the US. That's another in the series of crypto assets that are now going to be able to be used in a financialized, regulated way. And I think most importantly, for institutional adoption, that moment, that regulatory moment in the US, which is coming, we hope in the first half of this year, is a real marker post. When you come to the other side of regulations, you can engage with institutional buyers, institutional partners, banks, asset managers. That's never been possible in the US before.
Well, and it really felt like last year, as we were watching the performance of Bitcoin, just as an example, the fact that you started to see the rollout of those spot Bitcoin ETFs, you couldn't know for sure heading into 2024 that was going to happen, but it happened. And to your point, as Wall Street embraces more crypto, that got a lot of people wondering about how big the market ultimately gets. What do you make of the fact, though, that after that catalyst last year, the catalyst that we saw with Trump being elected, that now we're looking in the crypto market at some volatile performance, particularly with Bitcoin at a time when there's all these headline uncertainties and people are trying to determine, like, what are good stores of value in uncertain times? Is it gold? Is it Bitcoin? Is it something else?
Yeah, it's a great question. I mean, look, so the peak to trough, just to characterize it in Bitcoin, we had all-time highs, very exciting moment leading into the new year of around 109,000. It was about 37, 38%. That is incredibly normal in Bitcoin, particularly after you had a year like 2024, where you did have tens and tens of billions of dollars come into those ETFs. So we don't view that, having seen a lot in the last 8 years, we don't view that as anything abnormal. And in fact, what we think is normal when there's a macro pocket of uncertainty, which of course we have on both a geopolitical and a local and a markets as a perspective, crypto being a little downstream of that is entirely normal. I think what's more important from here is really separating what is investable and important in crypto from the perspective of an investor, which we view as Bitcoin, Ethereum, and Solana, from some of the other parts of the ecosystem that maybe take some more of the headlines.
Yeah, and I'm glad you brought that up too, because, even in moments like this, people come back to what is the Main Street case for crypto, like it's still not finding its way very easily into our day-to-day life. Now, interestingly, I mean, we know the names of stocks that are tied to consumers, but a stock itself doesn't really fit into your daily life either. But I guess, how are you thinking about the crypto opportunity? Is it really, at the end of the day, we're looking, because obviously you're thinking about asset strategy. Are we thinking about these as places that it will increasingly be lenses for people to invest based on where they see the world going, or will we see more real world cases for crypto?
I think you will. Look, it's been a complicated story. The reality is crypto, first and foremost, is a back-end technology, and that's hard to understand why that should exist. Where we are now versus 7 years ago, we have scalable, efficient, great blockchains. Again, the three I mentioned, Bitcoin, Ethereum, and Solana, which are 75% of the market cap of crypto, are really where you would focus most from the perspective of Main Street. Then you need regulations, and then you need front-end applications. So the front-end applications for crypto were part of the promise of 4 years ago, and the reason they didn't deliver is because you didn't have the back of the TV blockchains built out. You didn't have the regulations in a market like the US. So I think the next 2 to 3 years are about, and the litmus test for crypto, decentralized identity, AI crypto crossover, there's very exciting use cases that now need to be built, but now can be built.
Okay, I'm going to ask a question. We could probably take a year, but it's you've said a few times. You talked beyond Bitcoin. You talked about Ethereum, and you talked about Solana, and you sounded pretty upbeat on that. Can you just explain to our audience sort of the differences as from an investment perspective on those various cryptocurrencies?
Yeah, sure. Bitcoin's a store of value. It's digital gold. I think we've been running a Bitcoin fund in Canada since December of 2021 with our partners CI. So there's the CI Galaxy Bitcoin ETF, and really, I think what Canadian investors should look at is the assets that have been approved by the OSC have been very methodically added. So Bitcoin and Ethereum have been the main two. Ethereum was the first global supercomputer story alongside the digital gold story. What we're seeing now, 4 years after the last product was approved in Canada, is a flurry of Solana applications. We're excited to be filed with CI on the Solana ETF. We can't speak about the filing, but more important is Solana is a competitor to Ethereum. And we're really excited about that because you want to have healthy competition between large blockchains, just like you have competition between large stocks. Solana is fast, it's efficient. Ethereum is a little slower, but it's been around for longer. So really both of those against each other in a portfolio is interesting, and they have different use cases. And so when you think about a Solana ETF in Canada, for instance, there are yield components to that, there are portfolio construction considerations, but you really have this Solana versus ETF narrative that's going to emerge alongside a more stable Bitcoin as digital gold story.
Steve, appreciate the time. Thanks very much for breaking it down for us today.
Thanks for having me.